Welcome everyone to the Kendall Report. It is a special Fed day. I'm excited to be here. It's going to be an interesting day. It looks like maybe somebody leaked Powell's speech before we even got started, maybe. It's kind of interesting to see this little rally ahead of time, right? So fair amount to talk about. And please, since this is a very much an impromptu live stream, make sure you're asking questions, and I'll try to interact where I can throughout this session. We'll be going until the end of the day here, and we'll go right to the close, and we'll talk about everything that's relevant. We may get into some individual stocks, maybe a lot of stuff here. But we're seeing a pretty good bid come into the markets here, and I guess everybody's, like I said, maybe just maybe there's a leak going on here. Seems like somebody knows something, right? Yeah. So normally, right now, I'm in the live room on my other monitor over here. I have the some folks that are in the live room. I will be probably looking at some of their questions once we get going here in a little bit. We'll be able to do this. Give you a quick tip. Make sure, before we get any further, make sure you hit the like button and subscribe if you haven't already done so, and hit the notification bell. I do live streams every day, so usually in the evening at 9 p.m. Eastern time. But I have folks in the live room, and when we get to kind of a Q&A area, I will take a look at some of their questions, and I'll try to interact with the line here on YouTube as well. So yeah, because normally we're in a live room, but on these days it seems to be appropriate to come in here and look at this, at what's going on here. So a couple things to talk about. I put out a tweet earlier, so I think my expectations are pretty much what the street is looking at. And what the street's looking at right now is actually the idea that we're going to get a 50 basis point hit today, and then maybe 25 in February, and everything's going to slow down. One of the things I do expect Powell to be a little dovish, and I think maybe that's what the market's just really screaming ahead here. And in fact, I'm going to change the view of what we're looking at here while I'm talking. I think this would be a much better view here. This is a 1 minute chart, so we're going to get some activity. What I wanted to just bring up, the algos. This is really interesting. Algos are peaking out right here, suggesting we're going to have a bit of a pullback starting like literally this minute. This is a 1 minute. All three of the PPMs are peaking out here, and the algos are suggesting some pulling back. We'll see how this sets up. There's pretty decent bid in the markets right now, so we'll go from there. I think I am going to set up something that we usually set up here in the live room here, so bear with me just a second here. I just have to switch this over to the right contract, and we'll get on from there. So we're almost at the highs of the session. Okay, we're at this should be good here. Bear with me 1 second. So yeah, we're trading at the highs. Very, very interesting rally as we come into what's going on here. What I'm going to put up here is how a view that we look at a lot in the room, and I'll have level 2 over here on the right hand side. I'm not really too much in the way of the critical stuff. The level 2 prints and the order book is on the left hand side, and then on the right we have the algos we're printing. So we just got this, a couple of interesting things. We just got an STX sell signal on the 1 minute, and now all the algos are turning down. So that was kind of the final hurrah there for the moment. And right now we're 20 minutes away from the announcement. So like I said, my expectations are really for us to see a 50 basis point today. I think they do 25. The real questions that are going to be coming up today are, where's the terminal rate here? Are we going to hit over 5%? With the inflation numbers that came out yesterday, I talked about this in last night's video, is that we're really seeing inflation starting to pull back a little bit. There's been a lot of weakness in energy. There's other areas that have seen some pulling back. A lot of the commodities have also been pulling back. So everything's kind of coming in more in line. But if you look out, just to chat about this, is I think if you look out and see what's going on around the world, just we have another consensus out there, I believe, and please comment if you don't agree with me. That's fine. But the census is that we're going to have a bad 23. 23 is going to be really bad. I think 22 is really bad. It has not been a good year by any means. And maybe I'll touch on what's going on with Tesla later on when we get beyond all the Fed, and hopefully the market stabilize. It depends on how distracted we get with market volatility as we come into the next several minutes. But the point is here is that I think ultimately we will see 5.25. We will see inflation stabilize, but I don't think it's going to stabilize at these levels that we've talked about before. And I'm just going to mention a couple things that I covered, I think even 2 nights ago, or maybe even on Monday evening. But we're really looking at, I think, that inflation is going to be higher for a long time. Rates are going to be higher for a long time. But the other anticipation is, here we are trying to print up to new highs. And by the way, the algos on the 1 minute have stabilized, and now we're staying above the first derivative. Everything switched from, it looked like we were going to get a little top here. All we got was a consolidation, and it looks like we're trying to set up a potential for more new highs in this thing. So we may see 4,100. Let's see what time we got. Yeah, I'll just keep going here. A couple of things I want to set up for market action once we get close to at least the statement. And then, of course, half past the hour, we'll have Powell statement. So I'll try to get in on that. I've got Bloomberg queued up so that I can bring that in when appropriate. So we'll go through all that. But everything that I'm seeing here is that inflation is going to stay much higher, maybe well above, maybe right at 5 plus, 4 plus, something in that range. And the Fed's going to want to keep the yields above that for a while in an attempt to try to get it down to the magical 2%. And the magical 2% is a made-up number that came from, I believe, 2012. And everybody has the same dialogue, the BOE, and it doesn't matter. All the central banks, Bank of Japan, everybody is the only one that's not talking about that. And they're the only one that's still doing QE. And they've stabilized their currency by selling a couple hundred, $200+ billion worth of treasuries. So, but the bottom line is the Fed is kind of stuck. Everybody's questioning their real credibility on what's likely to on any of their actions. So they're going to have to stick with this story they painted. They tried to stick with the transitory story too long. They're going to stick with this one as well. So we're still consolidating here, just watching the market trade as we come in a couple of minutes. So let's talk about, let's go over just real quick, and let's take a look at this hourly chart here that I just put up. And what I want you to see, and we'll keep the level 2 over here on the left-hand side. But what we're seeing is we have, on the hourly, we have 3 Fibonacci targets. We've already printed one. 4090 is target number 1. Target number 2, 4108, 4119. And the algos are saying stable here and staying in trend mode. So the 10-period moving average is at 4065. That number is going to keep moving up as we go through the rest of the session here today. But everything is pointing to a stable to positive market here. There was a time earlier this morning that was interesting, looking like maybe the Fed was going to come up with something. We're going to see a big spike. A couple other things to talk about here is when we get these big reports. We saw this yesterday when the CPI came in a little lower than expected. It came in at 0.1. We also saw the year over year come in at 7.1 from versus 7.7 previous period. All this stuff is a big deal. I think the core was at 6, and see, I think I have these numbers here. Yeah, the core was at 6. It was at 6.3 previously. So all of this stuff is, I guess what we're seeing from the standpoint is, well, when we get these reports that come out, you get this volatility spike. And we saw that, and yesterday we came up, we got, it's right here on the screen. Let me remove some of this stuff out of the way. But right here on the screen, if you can see my cursor's at, that was the spike after that news. And we got what I refer to as an RTX signal. This, by the way, these are not Bollinger Bands. If you're new here, these are the WaveTech market grid. And it's a volatility calculation with Fibonacci sequences embedded in the calculations. So it expands the volatility and then contracts. And you can see since that big bubble we had yesterday, we got in a very narrow contraction. Now we're actually trying to break out of here right now. And the hourly chart is, well, well, right at the top of the hour in 12 minutes, we're going to get an update on this bar. You can see 11 minutes and 50 seconds away. So that'll also give us timing for when the Fed's going to come up, at least the announcement. And we'll go to Bloomberg and let them read the announcement, and we'll be able to watch I should be able to get it so we can at least see market action on the one side of the screen, so we can keep track of what kind of activity we're getting. But the real thing that I want you to watch for is whatever the reaction is. I talked to this a lot in our live trading room, is that you have an opportunity to fade that reaction. And I think last time we did something, I actually did a fade trade real time. But the bottom line is, what you get is there'll be a reaction, and then if it goes down, you buy the reaction. If it goes up, you sell it, and it's a quick 1 to 2 minute trade. It's just a scalp, and it's a trade that I usually do every time I'm on these meetings. In the case of this chart I'm showing you here on the 1 hour chart, the next 4 hours were all negative. And I put out on Twitter yesterday that the algos were suggesting, you can see how they decline. Well, that pattern that was there was the projected pattern. We have something called the AR auto regression algorithm that projects what the momentum is likely to do going forward. That's what these PPMs are, momentum indicators. So, and this is real key to all of the analysis that I do on the channel, along with our modeling and all of our portfolio management tools that we have. But the bottom line is, it's going to be interesting. I'll go to the 1 minute graph when we get the reaction, and we'll watch it really closely. So we're now down to 9 minutes 51 seconds. So let me just see what you folks are talking about. I look younger. Thank you for letting me look younger. It's hard to look young when you get 70 years old. I appreciate that comment. Just seeing here. Just looking at some of the comments here, folks. Yeah, so let's talk about this. Somebody just made a comment, and this is, I think that number, and I mentioned this in last night's video, I talked about it in yesterday's live room, is that number that we printed up there is, we look at the high, it was 4180 high on, and that number is going to be a key number to watch on a spike. I don't know how high this thing can spike. If we just quickly, I can go over here to the daily and we look at the market grid. So far today, we've had a high of 89. We're looking at 78 was R1, R2, 4104, R3 is 4130, and RXT is 4154. And then also we have, this is the daily chart I have up here on the right-hand side now, and we have 3 Fibonacci targets now. One of them's already been met, 4082, but 4147, 4187. So these numbers were hit on yesterday's activity. And I think the reason why we traded off as much as we did was because of the just nobody wanted to be that long. No one wanted to own 41 something ahead of this announcement that we're about to get here in just a few minutes. So we're down to 7 minutes 46 seconds at right now, trading at the 84. We backed off of this high just a bit here. We printed 89. Now we're printing 83. So folks are just, everything's just backing up a little bit. Yeah, somebody wants to know why I only trade 3 times a week. I have a lot of other things that I do, and I don't. Yeah, it's what I have to allocate out. So we have institutional clients. We have a whole nother. I have a number of businesses that I run, so I have to allocate out my time, and those are the best times that I can do to manage that. But it's a good question. I appreciate it. Be nice to do it every day. Someday when you're 70, anyway, I'm not going to play the age thing. Listen, I love what I do. That's why I'm here right now. Yeah, so just looking at some comments here, folks. Just looking around. I'm still hung up on I look younger and down in this corner. So maybe I'll stay down here. Okay, yeah, mostly generic things that we're talking about. So we are 6 minutes and 10 seconds away. We'll continue. I'll get something configured here in a minute. In fact, let me. Actually, what I can do here. Let me pull this out. Let's just get Bloomberg ready. I'm going to see if I can get it down and maybe just, yeah, this will work out good. And then I can layer this stuff so you folks can see what's going on and here. So that this will work pretty good. So I'll leave it down there when it's time. So we've got, 5 minutes to go? Yeah, so let's go ahead just for a couple minutes. I don't want to get too distracted here, but let's take a cruise around with what's going on here right now. And let's go over this screen. We got, matter of fact, sorry to flop around a little bit. Let's just come over here, take a look at what's going on. The numbers that are all hanging out here, we're at 351 on the 10-year. We want to watch that action as well. And actually, this chart right here, I'm going to go back to this page. This is the 10-year over here on the right hand on the bottom. This is the S&P 5-minute chart up here, and we can put what do we want to put up here? Let's put up the NASDAQ, and I'm going to flip this on this chart here over to a 5-minute. And so anyway, we want to get a good feel for that. The DXY is down right now. We're looking at down 0.38. I think the Dow is topped out. I've talked about that. We'll get into a lot of stuff once the noise starts to come down to a minimum from that standpoint. So I'm going to get back over, and let's get over to this graph over here. Let's get set up, just getting ready for the big party here. Okay. So we've got right here the 1 hour. This is the 1 minute. This is the chart I'm going to want up here. So we're going to be all set here. We are about coming into 3 minutes, and we'll bring up. Matter of fact, let's test the sound to make sure you folks can hear this. So let me know. And by the way, you can get rid of the delay if you scrub back and then scrub forward, all the way forward on the live. You should be able to get rid of most of that delay. It's about 20 seconds on YouTube, so you can get that out. I think also you can go to 2 times speed, and it will catch up, and it will push the envelope all the time. So let's see here if you folks can. Let me get the sound here, and let me know if you can hear this okay.
Rich, I want to finish on this
okay.
important question.
It's not echoing or anything, right?
Since the last meeting. Rich, based on the data, would you describe that as an unwarranted easing of financial conditions, or is it justified?
It's certainly not unwarranted. Look, inflation is public enemy number one. We got two good prints in a row on.
So we'll pause this for just a second. Okay, so I'm told that the delay trick doesn't work like that. So anyway, echo. Okay, well I'll mute out. Let me try it one more time.
Inflation. And so yes, there's obviously a macro input. Calibrating how much of the easing makes sense in terms of a model. I mean, that's a matter of judgment. But I think we're going to continue, John, to see this tug of war between the data and the Fed really throughout much of next year, because their models are telling them to succeed and get inflation down into the twos, they need to keep policy restrictive. But if markets keep easing financial conditions, the restrictive policy loses its bite. So stay tuned. This is going to be with us for a while.
Well, we're going to find out in the news conference, I think, in just 30 minutes' time, Tom. Priya Misra, Richard Clarida, to the two of you, absolutely brilliant.
Yeah, thank you.
As always, going into this Fed decision. TK, there's going to be some questions about that in the news conference, no doubt about it.
Priya Misra, the single smartest thing I've heard in the last 24 hours, and it goes to all this Bitcoin crypto malarkey we're talking about. She said humility is in order, and the distinctive feature at this central bank are frontline academics like
I'm just going to mute out the sound on the system.
Michigan, his colleague at Columbia.
I guess maybe you're still hearing us. Okay, never mind.
About these people have hardwired, built-in humility over how hard this is.
I think also scarred by the experience of the last couple of years, and for that matter, Lisa, the last 12 months.
Fed funds rate.
Okay, folks, you should be able to hear me. Everything's good. Yeah. Thanks, Jim. Yeah, so, it's out. Hang on.
7 or 0.8% on the NASDAQ with your Fed decision.
So this is delayed, so we're behind. Here we go.
This is a hawkish Fed. As expected, a 50 basis point move to between 4.25% and 4.5%. But the median dot for the end of 2023 is 5.1%. That implies that rates will go up another 75 basis points. And 7 of the 19 members thought they should go higher than that. Not what global Wall Street is expecting. Supporting that outlook, there is no change in the Fed's statement's promise that ongoing increases in the target range will be appropriate. Rates start to fall in 2024. The median forecast at the end of that year, 4.1%. Although there is a lot of division, the forecasts range from a low of 3.1% to a peak of 5.6%. Rates then drop to 3.1% in 2025, although one member still sees rates at 5.6% in 2025. The long-run neutral rate unchanged at 2.5%. The new economic forecast downgrade what is now seen as modest growth as the Fed tiptoes close to saying we will have a recession next year. They raise the outlook for inflation and unemployment. GDP for 2023 is seen at only 0.5 percentage point, down from 1.2% in September. 2024 is trimmed by 0.1 to just 1.6%. Unemployment ends next year at 4.6%. That's 0.2 higher than they had forecast in September. The same for 2024. Inflation remains elevated, the statement says now, with no acknowledgement of yesterday's decrease in the CPI. The Fed uses PCE inflation. The median forecast is that will fall to 3.1% by the end of next year, although that is higher than they saw in September. They saw 2.8%. It drops to 2.5% in 2024, 2.1% in 2025. Core inflation next year falls to 3.5%, up from September's forecast of 3.1%. The decision unanimous. So a much more hawkish Fed, at least coming out of the statement, than we had anticipated.
Mike McKee, thank you, sir. Of course, this is only half the story. The news conference still to come. So think about that as you work through the price action.
All right, so there we have it. So consensus, everything's super bearish, and then Powell's going to speak, and market's going to reverse, and everything's going to be wonderful again. So let me just let me flip some things around here just so we can get some screens back. And yeah, so you're already starting to see a bit of the rebound. The algos are just turning more bullish as we speak here. We'll see what kind of rebound we can get from this. So let's talk a little bit. The numbers I was hearing are pretty much in line with what everybody's talking about. I think it's the consensus that everybody voted the same. That means something. I'm not sure. I think that most of the time when you see action like this is exactly the action. They'll probably firm it up before Powell comes out and speaks, and they want it higher. I told you they've got to do this, folks. They have to keep this dialogue going. They cannot let it go. Like I said, they made a mistake with the transitory thing, and then they've just remember the people that are forecasting these numbers, not one of them. And if you go back to the previous meeting, go back a year earlier, not one of them had a dot plot over 0.75 yield when we're at 4%. None of them saw this. All this stuff is bogus. Look at this thing starting to rally back here now, starting to come back in pretty good here. Yeah, so just remember that. These folks are not the masters of the universe. They are when they talk about dot plots, you know why? They have a secret dartboard, I think. They just throw darts at it and see what it comes out to, and that's what they're doing. So we're seeing some stability. The algos, this is a 1 minute algo, so we'll stay here for a few minutes and just chat about stuff. And yeah, you are hearing me now, right? Yeah? Okay. Okay. All right. Yeah. I just want to make sure I see sound. I didn't forget to unmute. So there's going to be some pretty good gyrations in here for the moment until we can stabilize. So you can see the little bit of a bubble here on the market grid. This is 1 minute. It's starting to tighten up a little bit. The algo is suggesting we're going to stay negative because the moving averages need to catch up with the action here. So what we're likely to see is some stabilization here. So let's just stay here and watch this just for a couple minutes. Yeah, they're trying to trigger the algos here. I see somebody saying that they're talking about, very dovish, hawkish Fed. Yeah, so okay, everybody cover their positions now. Everybody get long, and we can bring it back up. I'm just watching. The order book is kind of crazy right now. I talk about this a lot in the live room. Right now, there's no liquidity at all in the order book. So we'll see how everything goes here. We're starting to see some stabilization down here from that standpoint. So we'll see what kind of patterns that come out here from that standpoint. All right. So let's go back and watch some of this stuff just continue. You see the 10-period moving average is coming down here real hard. What we're going to see is these algos are suggesting we're going to turn back up. We'll probably head back to the 21. That'll put us up there around the 40-60 maybe. That's a 14 handle run, not a big deal. This is a 1 minute graph, but it looks like things are going to try to improve. These moving averages are trying to stabilize here. We'll see what we get. Where are we? We're 22 seconds away from the next update. So we'll just continue to watch some of this stuff here. Yeah, that's interesting. that the Fed sees GDP growth at 0.5% for all of 23. This is exactly what I was talking about earlier, is that the that's what they're talking. Nobody is saying there's going to be a good 23. New lows on the session just printed. Okay, so they're coming in big time here, selling this thing. We'll just see if let's see if the algos are still negative here. So we're down 1.19. Let's see if we've got about 2 minutes to go. We're printing 40.27 now. So we're still pressing the lows here. Some pretty big selling coming in. There's blocks of selling coming in. Let me move this over so you can see this section here where right above me is the time in sales. So we printed down to 22. Let's come over here to the daily. This should be the daily. And S1 was 40.30. So we just printed an S1. And so far we've printed basically R1, S1 so far today. And this is on the daily. So let's go back here. There is the hourly chart. So algos have turned south here. Looks like they want to stay this way for a little bit. And going back to the 5 minute, I'm sorry, the 1 minute, it's still got a lot of downward pressure. So looks like we're a minute or two away from at least stabilizing, challenging the 43 handle, which would be the 10. This is coming down pretty good. So let's just watch this just for a few minutes here. Yeah, markets are starting to stabilize. You may not think so, but that's what's happening. So I like this. Bob's wrong again. Yeah, so that's what's happening. You keep watching. You might learn something. Yeah, so they were stabilizing here. We got another breakdown. Now we're starting to see we're back to 36. Like I said, we should challenge 36.43. There's a lot of volatility here, and there's no liquidity. So markets are very erratic. You can see how the order book is. There's 5, 10 contracts on a bid. So there's no stability. It takes, after one of these breaks, about anywhere from 10 to about 20 minutes to start to stabilize. And so I think they'll stabilize this a little bit ahead of time. So we've had a 22 low. Basically, S1 was 31. So yeah, no, it's okay to have an opinion. Listen, the rules on the channel is just don't call me names. You can disagree with me. I just you want to be a troll, as long as you don't call me names. So here we are coming back. We're about to test. You see that 10-period moving average is flattening out. And what's happening is we get above that, we should start to run back up towards the 21. But all these numbers are coming down at a pretty decent rate here. So we'll just have to continue to watch this market. We're going to stay with it. What time have we got? Maybe we'll do this until Powell comes back up. We're trading 31, 32, starting to print. So we should be able to get, the algos are suggesting we're going to get through the second derivative. We'll see what the next update is, which is going to happen right now. So we did get through the second derivative. We're about to take out, this is what I was talking about earlier. We should get up to around 36, 37. And then the next level that we're going to be looking at is potentially in the 45 to 52 here. And so we'll just continue to watch the trade. So we're through the 10-period moving average. The PPM1 algos correctly projected, at least for the test of the 10-period moving average, which we did. And then we'll just have to see what kind of follow through and what this formation sets up as. So here we are, all the way up to 40 all of a sudden. So we're starting to see a little more of a bid trying to come back into market. we still have no liquidity. So to give you an example, folks, we're trading right now. Let me get a number. We're 34 bid at 37 offered, roughly. We're 3 handles wide, roughly. Just trying to look at the, we're 35, maybe 37 is probably where we are right now. So, but we are starting to see that stabilization I was talking about. And it looks like PPM2 is trying to stabilize. We should start to move up. Here we are over the 40 handle. Last high in this last sequence was 41.50. So we're looking at, we're staying right within the market grid. We're trading STX on the market grid. Here's 42. Like I said, we should move up. 48.52 should be at least the target. Here we go, 45 printed, I think. 44.50 printed there. So we're going to continue to see this thing come back here. So it's going to take, it looks like maybe another 4 or 5 minutes. We'll hang out here. Yeah, so here we are back at, like I said, it's hard to quote this market right now. It's at least 3 handles wide, meaning it's 37.40, maybe 38.40 right now. If you just look at the bid ask, the algos are stabilizing on PPM2, and it looks like it's another 4 or 5 minutes, and then possibly we can start thinking about trading as high as into the 50 handle, maybe 60 handle, if certain things happen here. It looks like we have a little downside for a couple minutes here. This downward slope of the 21 period moving average is at the 51 level right now. It's dropping 2 handles per minute. So it's coming down pretty hard. So we're starting to get a little weakness come back into trading just at the 10. It's 35. We're trading back to the 10. There's really, it's still in a negative trend mode down. So we could set up another right shoulder in here. So we're going to see a little more weakness. And then in the next 2 or 3 minutes, we're going to find out the character of what kind of rebound we're going to get. And listen, nothing's going to rebound a lot until after Powell starts talking. So we're looking at a little bit of work here to go back into the 40 handle. Let me see how much time we have here. We have 50 seconds on this next update. So back to 40, 42, we traded down to 35 there. We know we're having a good day when the bots are showing up again. So here we are back to 35, 36 handle. We're finally flattening out here on the 10, and it looks like we should turn back up and test this 21 period moving average here at 40, 46. Let's see if we can hold these levels right here.
Order filled.
Back to toward the 40 handle again. This is what should happen. We should stabilize around this 10. The 21 is going to be the next challenge, and it's right now at 44. We're trading 42. So this will be the next barrier. This 21 period moving average is the primary, in this case, supply line right now, and it's still negative. It's still at minus 0.54, which means that there's resistance right at this 44 level. So expect resistance. We should get sandwiched between the 10 and 21, and what's likely to happen here then is, which is 36 to 44. Yeah, I got rid of the spammer. I just happened to see him right away. So still trading in here at the 40 handle. No problem. So we're starting to trade. The 10 period now is 37.50. Like I said, that should be stable. We're starting to see some potential weakness come in. If we can get above the 21 period, folks, at 42, we're trading up at 40. We're trading almost there now. Here it is, 42. We get above this, then we're going to have a clean shot up into 55 handle plus. So we'll start to see some serious recovery on this market if that occurs. And it looks like it's trying to here. We're trading right at that resistance point. We need at least, we're going to get an update here in 4 seconds. So let's see what it looks like on PPM2. Okay, still stabilizing, but that 21 has still got a lot of resistance here. It's now at 40.50. So we're finally trading above the 21. And we're about to get crossovers, 1021, and we'll start to see this thing should stabilize in here. There looks like in the next, we're going to say 2 or 3 minutes, there's a possibility of running above this 21. There's still resistance here at the 40 handle. So we're trading right at that level. So between 37, 40 right now is around the support. Here we are at 36. But like I said, it's really hard to quote because I'm seeing bid ask in the order book that have one contract on it. So there's virtually nothing in here. So it takes 100 lot order can move this market 4 or 5 handles if any big orders come in. There's still some downward pressure here at the moment. This is where the money's made. We should, like I said, if we can stabilize here, everything will be cool. The 1 minute chart, let's see, where are we here? We got about 6 more minutes. So we'll just continue to kind of follow this 1 minute graph, looking at the order book. Here we are back at the 40 handle, which puts us back over the 21 is now 39.20. So we're trading right at this level. We just got the update, and if you notice here, I'll put my cursor here, the PPM2 has crossed over its first and second derivative, which now tells you we're in clear space. Next target potentially is for a move to the 40, but it is declining. Let me just get a number for you. It's declining about $2.50 per minute. So it won't take long. It'll be down here at around the 50 handle. So we're still struggling right here at 40. But you can see we've flattened out substantially here. So here we are at 30, 35, 36. Yeah, somebody said I'm super serious. I am. Yeah, so a little chatter here. We're seeing the market grid. Remember this big bubble here that came in on the 1 minute. Now it's stabilizing. We're starting getting into a little bit more of a consolidation. PPM2 is starting to suggest, let's see here. Yeah, we still have some downward pressure here off this PPM2. PPM3, it's like 4 or 5 more minutes. Of course, guess what? That's exactly when Powell's going to start talking. So we'll tune over and bring up his opening comments. Yeah, I don't think the oversold bounce is over. We're just hovering right in here. So we're coiling here, getting ready. I think we'll see the prices meet the 40, but the 40 is coming down. So we'll have to watch this pretty close. The algos are suggesting that we're going to see some little more increase in the 21. So it's suggesting we're going to get above the stay above the 21 on a closing basis, which is 37 now. So it's still declining slightly. There's still a negative 0.12. So those of you who haven't seen these indicators before, anything at a 0.25 minus or plus is actually a trend. So if it's a negative trend, it'd be minus 2.5 plus, positive trend minus a plus 2.5 plus. Right now we have PPM1 is minus 1.3, so we're still in a negative downward slope. PPM2 is minus 0.12, so they're pretty similar. And PPM3 is in minus 0.22. And you can see the first and second derivatives. So we're still just kind of snaking along in this little trail right at the moving averages. And this is most likely a pivot point that we're setting up here. Let me put something on here and let's just see if we're okay. I do have them engaged. So here we go. We're back at 39. The pivot. If you notice, the 10 is at 37.43. The 21's at 37.25. So we are like lockstep, and we're trying to get a little bid here. See if we can get above this. Like I said, we should run up 48 handle. 48.52 should be the next target. Still struggling here a little bit at this 35, 34 level. There's still downward pressure, like I said. It's interesting, PPM1 is now turned positive on this last update. PPM2 is only down minus 11. So we're not in trend mode. And the market grid is very tight in this range here. So we're just going to follow what we got here. Another 4 minutes, and then we'll watch Powell, see how this thing, once he starts talking, what happens. $34.35. It's actually stabilizing. The order book is starting to fill up just a little bit. Very good. We just got some upward, the WaveTech Fibonacci projection tool just this minute has targeting the 40 right now. There's 3 Fibonacci targets, 52, 60, 65. Algos look like they want to turn up here So those are the fib targets here, which puts us up to potentially toward the 200. So it's interesting that these things are firming up here about a minute and a half from Powell's speech. Let's see if we can, let me just start this.
But based on the price action so far.
People emailing in on this because I know it intrudes on a Fed meeting, but, you know, Miner and frankly, Diane and all the rest have such a perspective.
Yeah, just trying to get set up here. Let's get this out. Yeah, so we're getting a little rejection out of here. Still having a hard time getting any kind of momentum to the upside. There's still a lot of selling, but it's really not a lot because just the illiquidity of the order book right at the moment. There's just nothing in there. This is pretty illiquid. Biggest offer bid is around 50 or 60. Pretty small. So we'll see if we can get up towards some of these numbers here. I know what I'm going to do here. I am going to take this and move it to another monitor so that I can see when Powell comes up, okay? So bear with me. As soon as he comes up, I'll bring it out over. Still just hovering at this 35. Look at this. We've been in here 15 minutes now at least. 12, 15 minutes. Just stabilized right at this level here. So you're pressing them down to the lower levels that we've been, all the way down to 32, right before he's going to talk here.
Order filled. Order filled.
So dipped down a little bit below those numbers and then came right back into the range, back into 34, 35. Okay, they've got eyes on, here he comes. Here we go, folks.
To underscore for the American people that we understand the hardship that high inflation is causing and that we are strongly committed to bringing inflation back down to our 2% goal. Over the course of the year, we've taken forceful actions to tighten the stance of monetary policy. We've covered a lot of ground, and the full effects of our rapid tightening so far are yet to be felt. Even so, we have more work to do. Price stability is the responsibility of the Federal Reserve and serves as the bedrock of our economy. Without price stability, the economy doesn't work for anyone. In particular, without price stability, we will not achieve a sustained period of strong labor market conditions that benefit all. Today, the FOMC raised our policy interest rate by a 0.5 percentage point. We continue to anticipate that ongoing increases will be appropriate in order to attain a stance of monetary policy that is sufficiently restrictive to return inflation to 2% over time. In addition, we're continuing the process of significantly reducing the size of our balance sheet. Restoring price stability will likely require maintaining a restrictive policy stance for some time. I'll have more to say about today's monetary policy actions after briefly reviewing economic developments. The U.S. economy has slowed significantly from last year's rapid pace. Although real GDP rose at a pace of 2.9% last quarter, it is roughly unchanged through the first 3 quarters of this year. Recent indicators point to modest growth of spending and production this quarter. Growth in consumer spending has slowed from last year's rapid pace, in part reflecting lower real disposable income and tighter financial conditions. Activity in the housing sector has weakened significantly, largely reflecting higher mortgage rates. Higher interest rates and slower output growth also appear to be weighing on business fixed investment. As shown in our summary of economic projections, the median projection for real GDP growth stands at just 0.5% this year and next, well below the median estimate of the longer-run normal growth rate. Despite the slowdown in growth, the labor market remains extremely tight, with the unemployment rate near a 50-year low, job vacancies still very high, and wage growth elevated. Job gains have been robust, with employment rising by an average of 272,000 jobs per month over the last 3 months. Although job vacancies have moved below their highs and the pace of job gains has slowed from earlier in the year, the labor market continues to be out of balance, with demand substantially exceeding the supply of available workers. The labor force participation rate is little changed since the beginning of the year. FOMC participants expect supply and demand conditions in the labor market to come into better balance over time, easing upward pressures on wages and prices. The median projection in the SEP for the unemployment rate rises to 4.6% at the end of next year. Inflation remains well above our longer-run goal of 2%. Over the 12 months ending in October, total PCE prices rose 6%. Excluding the volatile food and energy categories, core PCE prices rose 5%. In November, the 12-month change in the CPI was 7.1%, and the change in the core CPI was 6%. The inflation data received so far for October and November show a welcome reduction in the monthly pace of price increases. But it will take substantially more evidence to give confidence that inflation is on a sustained downward path. Price pressures remain evident across a broad range of goods and services. Russia's war against Ukraine has boosted prices for energy and food and has contributed to upward pressure on inflation. The median projection in the SEP for total PCE inflation is 5.6% this year and falls 3.1% next year, 2.5% in 2024, and 2.1% in 2025. Participants continue to see risks to inflation as weighted to the upside. Despite elevated inflation, longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. But that is not grounds for complacency. The longer the current bout of high inflation continues, the greater the chance that expectations of higher inflation will become entrenched. The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. We are highly attentive to the risks that high inflation poses to both sides of our mandate, and we are strongly committed to returning inflation to our 2% objective. At today's meeting, the committee raised the target range for the federal funds rate by 0.5 percentage point, bringing the target range to 4.25% to 4.5%. And we are continuing the process of significantly reducing the size of our balance sheet. With today's action, we have raised interest rates by 4.25 percentage points this year. We continue to anticipate that ongoing increases in the target range for the federal funds rate will be appropriate in order to attain a stance of monetary policy that is sufficiently restrictive to return inflation to 2% over time. Over the course of the year, financial conditions have tightened significantly in response to our policy actions. Financial conditions fluctuate in the short term in response to many factors, but it is important that over time they reflect the policy restraint that we're putting in place to return inflation to 2%. We are seeing the effects on demand in the most interest-sensitive sectors of the economy, such as housing, It will take time, however, for the full effects of monetary restraint to be realized, especially on inflation. In light of the cumulative tightening of monetary policy and the lags with which monetary policy affects economic activity and inflation, the committee decided to raise interest rates by 50 basis points today, a step down from the 75 basis point pace seen over the previous 4 meetings. Of course, 50 basis points is still a historically large increase, and we still have some ways to go. As shown in the SEP, the median projection for the appropriate level of the federal funds rate is 5.1% at the end of next year, a half percentage point higher than projected in September. The median projection is 4.1% at the end of 2024 and 3.1% at the end of 2025, still above the median estimate of its longer run value. Of course, these projections do not represent a committee decision or plan, and no one knows with any certainty where the economy will be a year or more from now. Our decisions will depend on the totality of incoming data and their implications for the outlook for economic activity and inflation. And we will continue to make our decisions meeting by meeting and communicate our thinking as clearly as possible. We are taking forceful steps to moderate demand so that it comes into better alignment with supply. Our overarching focus is using our tools to bring inflation back down to our 2% goal and to keep longer-term inflation expectations well anchored. Reducing inflation is likely to require a sustained period of below-trend growth and some softening of labor market conditions. Restoring price stability is essential to set the stage for achieving maximum employment and stable prices over the long run. The historical record cautions strongly against prematurely loosening policy. We will stay the course until the job is done. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I will look forward to your questions.
Okay, folks, that's tough to set through, isn't it? It's kind of blah, blah, blah for the most part. Markets did take another dump here. Moving averages have moved down. Algos are trying to stabilize at the next level down. We did print down to the 39.97. That was bargain prices, bargain basement for today anyway. If we go and I'll take a look at the daily market grid, S2, S3 is 39.79, S2 was 40.05, so we're trading right around S2 right now. And we did hit that fib target 1 earlier, and we're really just trading. R2 is 41.04. The range for today has been 40.90, 39.97. So we've had about a 100-point range. So it's been pretty volatile. It looks like they're trying to catch a little bit of a bid at the moment. Let's see here. That is the 1 hour. Get to here's the 1 minute. So we're catching a bid. We're getting up. All of a sudden, here they come. Everybody's buying. As soon as he stopped talking, there's a bid. I see a big reversal. Algos are starting to suggest. Now, what's interesting about this pattern, folks, and I'll just set this up for you here, is that what's interesting about this is all of the moving averages are now in more of a position for the markets to try to stabilize here. The order book is just blowing up. I just can't even tell you what the level of illiquidity really is here. It's just it's terrible. You can't even use the word liquidity. Here we are all the way back to 11.10 again. So, but the bid now, what I'm looking at right now, we're probably 5 handles wide at the moment as far as a bid ask goes. It's just not. You can see the erratic behavior on the level 2 here. It's just absolutely amazing on what's going on from this level. So, so it looks like we're trying to do another level of stability. So this was coming into the talk. As soon as he started talking, we dumped. And now here we are. We're trading down into the down to the S2 level is 05. So we're trading right into S2. We're right at the 10-period moving average. So it looks like we're trying to stabilize here. But if you recall, if we go back, I think the last meeting, we had this crazy down. All of a sudden, the markets rallied like 100 points off of the lows or something, 110. They started going up and they just wouldn't stop. Right now, what we're seeing here, I think, just from the erratic action here, is that we're back to the 20 handle. I mean, I can't even keep up. I have to scroll down. 20, yeah, we're all the way back to almost 25 here. But like I said, it's impossible to, if I had to quote this market, it would be impossible to do. I'm like 20, look at this. Here we go, 27. Yeah, it's just getting, it's getting pretty crazy up here. Yeah, this is, here we are, 35. So here we go, folks. As soon as this guy stops talking. So we're looking at pretty big reversal here, and yeah, back to 20. Look at this, back to 24. So we just did 10, 12 handles in less than a minute. But I really don't think, I'm telling you, if you had 200 to buy at the market right now, you would fill all the way up to 27, 28, maybe more. There's just no liquidity in here at all. So that was a pretty big run, to say the least here. And yeah, we're just getting I have to tell you, you know, I came from the old school trading floor days, and I have to tell you that this is the kind of stuff you would expect when there was no electronic market. So we traded 35 back to 17. So that's 17 handles. We're talking, and this is a 1 minute chart. We're talking 2 minutes. So this is a pretty insane volatility. And yeah, we're just, these prints are pretty amazing. As far as the 1 minute chart goes, we'll go on. I think what we'll do is, who knows what Powell's saying. I don't want to sit through all of that. I think it was somewhat painful just to listen to the blah, blah, blah speech of 2% inflation. And if you notice something, I did pick up something in listening, is that what he was talking about here is that we actually had something, you know, he was talking about all the way to 25 to get to 2%. So they're talking about 2 years of this stuff to get to those levels. So I think that was probably the thing I picked up. And what they're basically saying, we have no clue. It could take us 2 years to get there. Maybe we'll never get there. Imagine just any of our lives, what can happen in 2 years, right? That's a very, very long time. And so here we are, printed 35. Look like we got a big bid coming in, back to 15. So we'll see if we can, from the algo standpoint on this 1 minute chart, it just really looks like we're, instead of trading 34, 35, now we're trading 15, 20. It looks like the numbers here that we're trying to at least get that. One of the things that happens with the market grid when we get into this type of pattern, it starts to consolidate. Let's go over to the hourly. We haven't looked at that for a while. Hourly is suggesting that we're going to see the 10-period moving average continue to try to decline into this action. So if we go back, think about this. If we go back to yesterday's spike high here, that I have the that I have the pattern on. 1 second here. Yeah, back to 1213 here again. But if you go back to this spike that we had here at 4180, and then you look at this, we're down to 3997. It's almost 200 points from yesterday morning spike. Big round of selling coming in here. You see big blocks of red coming into this screen here. That's pretty interesting from that standpoint, I think.
Order filled. Order filled. Order filled.
All right, so this is also an interesting number. We printed down to the 200 period moving average on the 1 hour chart. And like I said, all the algos are suggesting that these moving averages are going to have to catch up to where the market is. So no real analysis there other than I think if we can hold the lows that we've had so far, then we're likely to rebound and probably see 35.40 again. And that's going to be a range that's being set up between 05, which is S2, and probably the 35.40 level on the upside. So let's go back to this 1 minute. And then what I think we'll do here, folks, we'll continue to check in. Yeah, Jess Yates, do it all the time. Yeah. You should come, you should get the indicators, come in the live room. Yeah, so here we are printing, just like I said, we should see this going. We're back to 2025. So it's just very erratic here. I can just tell you those green bars mean something, and they mean something to me. Yeah, so just very erratic in here. Like I said, these are very difficult times, folks. If you're trying to trade or anything in there, it's just really, very difficult because there's nothing in there. I can't imagine what the micros look like. Yeah, and conservative Joe, I agree with you. If we can get above 35, then we'll see a pretty decent pop. And listen, the second Powell stops talking, he'll probably recover. You know, he's still saying stuff. Like I said, here we are back at 15, trying to trade back down to this 15 handle. So what we're seeing here, there we are, 14. It's coming right back in again. Yeah, so what we're building on, I don't have one up here. Let me see what we got here. This is daily, 1 minute. Let's switch this over to a 5 real quick here, folks. This is actually very interesting. The 1 minute suggests that we're still in this, you can see this angle here. I talk a lot about the moving averages setting up an angle of attack. That rally we had just a few minutes ago went right to the 10 period moving average on the hourly, 28. The high was 29.50, so we got rejected off of that number. And the downward slope of the PPM right now is at 0.84. This is a big time downtrend. So it looks like the algos are suggesting that we got another 15, 20 minutes in this. And once this algo starts to turn up and we see the patterns start to turn up, then we can get some action back into the market grid. But we've seen two bubbles in here with two spikes in volatility in the last hour. So these are really difficult days to trade into. But the caution is if you have access to this level 2, when you see numbers like this and you see activity where it's just bouncing around like it's a ping pong ball in a glass, it's not a good sign. So we've traded down about 12.13 again. That last run up was around, let's see, I can tell you exactly what it was. That last run up, we went to 40.2950. That was right on that 10 period moving average. And we're a minute 20 away from an update on this 5 minute. So we'll go ahead and let's just stay here for a minute. Here we go again. They're testing that number. The 10 right now is at 26. We printed up back to 20. I don't think they're going to be able to press them down into a new low, but there is some vulnerability here. So we're going to find out here in the next few minutes. So let's just stay with this, folks. This is what we should be doing in the live room anyway. So back to 22. We've got an update here in 1 second. Here we go. So PPM1 on the 5 minute just penetrated through. We're now at 0.27, so we're still in a trend mode. So there's some resistance right here at the 25 level. Looks like it's going to stay there. The 21 is coming down above it. What my expectation would be here is that we can possibly get up to 48, 49 in this pattern. Minimum 38 to 48 is kind of the estimation on a rebound if we can get one. There's still work to be done down here, it looks like. And let's see, what time is it? Let me just bring up Bloomberg on the other. I doubt if they stick with the whole Q&A. Let me see if I can get to that. Yeah, see someone saying it's like whack-a-mole. It really is. So here we are back at that 22. 25's our pivot right now, folks. That's the number we're looking at. And then that 35 number would be the next level pivot. To get through that, it'll be a melt up if we did that. I'm not suggesting that we will. Key word there was if. Here's 23s. So 25.50 is the number. Here we go. 26 just blew right through it. Still struggling right here at 25. That's your resistance. We printed, what was the high we got to here? We got to 27.50. So we busted through it, but came right back in, back to 21, 22, back to 20. Looks like, yep. Right, look at this, all the way back to 18. So, but this movement in price is look at this, back to 25 and a handful of ticks. There's just nothing in this order book. And that's why if it gets over a certain level, you could just get a crazy move to the upside, especially with probably everybody in the world thinking negative here. You you break over 35, 40, and you go ballistic on this. Not predicting it, just saying if. So back to 18 handle. So we rejected again. Let's take a look at that high. It was 27.50 on the 5-minute. We still have ppm1 at a negative 0.22. We got an update in a minute and 36 seconds. Just a choppy mess when you're looking at some of the patterns out there right now. So we'll just stay with this for a minute. I want to see if we can get any kind of indication here that there's just looking at the hourly. Yeah, there's nothing's going to show up here. Everything we're going to see now is going to be on the 5-minute. Let's go back to the 1 minute for a second here. Just get a feel for this. Yeah, 1 minute's just sideways. It's just staying sideways here. So there's not anything. What's interesting here, haven't looked at the one, is we see these patterns formulate, and we have Fibonacci targets both up and down right now. There is something called a WaveTech Pattern Finder, and it locates its patterns. Here we go, trying to run up on 23. Fib targets on the upside is 38, 50, 58. That's what's showing up off of a 1 minute chart here, and that has to do with the volatility that is being projected here. So here we go. We're trying to 25 handle again here. Here we are, 25, 26. The last high is 750. That's our pivot into pattern. So we went all the way to 26, back to 23, 22 prints. We're probably 22, 25 on the bid-ask offer in real world here. Eric, I don't think we're going to break down into new lows. Like I said, we're sitting here right now at a decent point to move higher. Back to 25. There's 27. There we go. Look at this. Up to 29.30.
Order filled. Order filled. Order filled. Order filled.
Yeah, actually the time to buy was down at 40.12. So we rejected again, folks, right out of some key numbers here. We got up to 31 print that time. So back to 22.
Order filled. Order filled.
And so we're going to try another run here. Back at 27, 28. Algos are peaking out here on a 1 minute. Let's go to a 5, just see what we look like there. And very interesting. This red dot up here is a pivot, 40.65. I know it's a long ways away, but if we print through that, this is going to be substantial. We're printing 32 handle now as we speak, 32.50. So this is a new high in this run. Here we go. Here we go. 39. This is 38.48 level I was talking about earlier. We should see this thing at least test the 21 here on the 5, which is at the 48.49 level. We'll see if we can. This is a pretty good print. Where we at? Minute 42, we'll get an update on this 5-minute bar, folks. And what we should see here is we'll start to see a turning and this pivot up here at 60. If we take that out, we're making new highs on the day. I'm saying it out loud. So here we are. We just traded 47.50 printed. So this was the 38.48 level I was talking about earlier. The algos are suggesting more strength here as we go forward on the 1, which just tells us that the 10-period moving average is going to turn up. So we printed 47, and then here we are back at 38, okay? So these numbers don't make any sense just for the way that we're trading right now. I'm looking at onesies and twosies in the order book. There's no liquidity. But I'm telling you, this number above, we should see a relative strength, meaning that the 10-period moving average should start to turn up. We should start to move up from here. And that's going to be the key. So, yeah, we're trading above RTX as well on the 5, even right now. Let's see where that number is. That's 42, we'll call it 43, 42.90. So what's going to happen here, we have 4 seconds. Here we go on the update. There it is. Boom. Update. Yeah, we're going to see some consolidation here now, folks. So that was our high print at 47. You can notice that the market grid's turning up. Right now, 30, S2 35, 29, 25. These are levels that we're going to look at to actually stabilize in here and then set up a possibility. I'm just trying to see how many bars, 2 bars out, so 10 minutes out, that we'd see this start to bottom out, and then we can challenge that pivot up here at 60. What is that number? 65, 67 is actually the pivot number. And that would be, I'm telling you, if that happens, they say, Katie, bar the door. So we're coming back in to the grid here. So we traded as high as 47, back to 34. Back to 40 as fast as you can say 34. Here we go again, back 41. Another little run coming. It looks like all the aggression right now is on the buy side. All right, so still trading around 40, 41. Just reading some of your comments. Thank you, folks, for commenting. This is so important in these live streams. Let's see what the hourly is looking like. Oh, wow. So what we got an update on the hourly. All of a sudden, the algos are suggesting that we can challenge the 10-period moving average. Guess what that number is? 40, 60, 60. So yeah, so this is pretty exciting here, folks. What I'm hoping for, we got an hour to go, that at some stage we can. I'm hoping you folks are picking up some stuff and the value of understanding this technique here, because it's pretty obvious. I mean, we are printing down below 40 handle was free money. Okay, all I can tell you is free money, and it was there for the taking. So now what we're doing, let's go back to the 5. And so we're rejecting off of this 21. Look at this. We get the right number up at 2140. This is awesome. So 47.67. PPM2 is minus 0.46. Told you there's only a 30% probability to get above that number. We got rejected. We're back to 36. Now we get sandwiched in the market grid and between the 10 and the 21 here for at least another 5 to 10 minutes. And what will happen from here, or it should happen, is that out of that, we have a potential of, it's a little more than that. It's coming into the close, like we're going to get some short covering into the close potentially here from just looking at the algos and expectation. So we're back to 41 handle here. So the breakouts, 47, we'll call it 48. Here comes another bid in here. And I'm having so much fun, I need another Runa. So here we're trading around the 40. Pretty heavy resistance right here, folks, at 48. But this is probably when Powell, has Powell stopped talking? Anyone know? All right, here we go, 50-51. It's rock and roll time. Oh, he loves the stage, doesn't he? Look at this, 52, 54. Huge bid coming in here. 55 prints. 57 prints. Here we go on that pivot. 61. Algos are still projecting higher prices on the 5, folks. There's going to be resistance right here at this pivot. That's 65.65. So we printed up to, what we get up to here? 1 second. We printed 62. So it just came right up to it. Holy snikes. What a huge trade going on here. Okay, 63, 64, here we go. 65 is the pivot. serious, folks. We take this out in a meaningful way. We're going to see a new high in the session. What is that high? That high is 90.75, 66, 67. Where's that guy that said I was wrong about stabilizing down there? It's not supposed to make sense, Joseph. Listen, this was, you guys have been listening to me. I just stayed with this trade. This is a key moment here, just that we're getting above this pivot, and we are where? We are a minute 30 from the close of this bar, okay? It's going to be interesting to see what happens. You guys hold the fort down. I'm going to go grab a Runa. All right, 44 seconds to go. We're trading right at the number. We're trading 63, just under the pivot. Man, 59. So we're not going to get the close over the pivot. We're 26 seconds out. Look at this, 56. We'll see if we can get a quick bid here. We need a 65 plus print. Nine seconds. There's the close. We close right below it. I'll go suggest, by the way, this is an interesting pattern, folks. I just want to explain this to you, and I'll draw some things in here I want you to see, because what's happening here is, it was buried in here. There was actually a pivot right here. I'll pull that number out in a minute. But what's happening here is this, is we have a pattern, and I was so intense in watching some of this stuff, but this was a pattern that was being projected here. You can see the market grid is pointed up here. Probably what we're going to get is the market grid to turn down. What time is it? We only have 30 minutes to go. So I guess this is what we're doing, folks. We're just going to go through with this trade, but we probably get some consolidation here on the 5-minute. That's what this algo is saying. What this algo is saying is that toward the end of the market, we catch a bid maybe after the close comes in today. So I hope you enjoyed today's stream. We have quite a few people on, actually, so folks are hanging out. But this pattern, what I was showing you today, it just kind of got deep into this. Let me get rid of this. This is a lot of what we do in the live room when we're trading here. This has been a pretty intense trade. We're just seeing this thing continue up, and yeah, I'm glad, Fred and Nick. Thank you. Yeah, so what we do, folks, is so we're getting pullback here. This is what I was talking about. This bar is going to be a down bar. Everything is pointing to this being a down bar. We're back to the 21 on the backside. The 21, by the way, is still down 0.38. This is negative, and we're coming all the way back to RXT here. So we printed up to 65, 67. That pivot was pretty much probably a pretty good exit for the trade, hindsight being 2020. So we'll see what sets up. We're right at the extreme of the market grid, and we still have no order book in here at all. But basically what happens, folks, if you get the indicators, if you buy them now, there is recorded information in there that you can get to. But when I come back, I'm taking a break. Tomorrow night's video is the final video of the week. And tomorrow's live room would be the final live room for the year. But we do them Monday, typically Monday, Wednesday, Thursday, and they're 1 to 4. And we go through and do stuff like what I did live today. And I kind of owed this session to everyone. Yeah, a good call. It was buried in there, but yeah, we did reject him around the 40. So now where are we at here? We're less than a minute away from this next update, but we'll see the market grid turn down, and then we should see some consolidation. About coming into the close today, it looks like what we're going to get is a potential right after the close. Maybe we catch a bid. Maybe folks are looking to cover up. Maybe they caught a lot of folks short down in the hole today. We'll find that out here in just a few more minutes. Yeah, so either way, if you sign up for the live room, you get the indicators free forever. Okay? And if you don't want to stay in the live room, you don't have to. It's a one-time, it's basically a 2-for-1 trade. You get the live room for 30 days and you get the indicators, or you buy the indicators, you get the live room. So, and you're going to have all the numbers when I get back. So while I'm gone, so you'll have all the, not just on the indexes, but anything you want to trade. You have all these tools. There's I think 9 videos class to help you get started. There's a bunch of stuff out there. So anyway, yeah, so this is, you see, we got the update. Look, that the market grid came down. There's a number in here that I missed, 4028. Man, I am sorry I missed that. It's okay. It was embedded. It was a pivot. This red, green dots. I don't know if you can see them very good, but they were that was exactly that was the pivot. I forget what we were using as pivot time. I think just the 10-period moving average just below that, but 25 was the number I recall. And we're trading back to 49.50 here again. And so we're probably not getting this monster run. We got to the pivot. We couldn't close above it. We're back below it here. PPM 2 is still negative, and we're looking at what time here? We got a ways to go yet here. Why did I think we were at 1:30? So we got 40 minutes yet. So it looks like we're going to stay with the 10-period moving average is turned up. The 21 is still down. So that's going to get the market to hang around that value right now, which is 43. As I say it, we trade 43. But this value, a little bit above and below 43, is where we should hang out. It looks like where we at here on the timing. So we still have 3 minutes to go in this 5-minute update. And what we're looking at here, let me change the scale in just a touch here. And what we're looking at is that the 10-period moving average is still going to stay in trend mode. Right now it's at 1.19. 0.25 is trend. Okay, so this a pretty big monster trend underlying. It just tells you that's where your major support is at 35. Remember that number? We traded 35 for a while in down around this area here. That was where we were consolidating there on the 5-minute. Let's go over to 1 and let's take a look at what's going on there. We haven't looked at that. So interesting. So the 1 minute is suggesting we should bottom in the next couple minutes, and then we'll start to see some movement back to the upside. The Fibonacci price projection tool is suggesting 4106, 4132, 4148. And that would be a pretty monster move, to say the least. That's 50, 60 handles from where we are right now. In this kind of world, no, it could be very easily to do that. Yeah, we'll finish off watching this trade just for a little bit more. I've got a vested interest in watching this thing, so kind of locked in. I had a lot of different intentions and doing a lot of macro talk and things, but this is how we worked out, so it was good. It's just there was just such an opportunity on the market down there in that low 40 handle. My goodness. Yeah, I think you can get links if you are interested. They're flowing across the top of the charter, kendallreport.com/indicators. Or you can go to kendallreport.net and go to our website there, and you can actually buy the live room, which, like I told you, you'll get the indicators. So either way. Yeah, folks, I'll tell you what I'll do. Since we get wrapped into this trade, we're back at 46 handle here. Algos are suggesting we're going to stabilize, try maybe a mini run here. It doesn't look like, I don't know that we're going to be able to print up to these. The fact that the triggers were there, but I do want to show you something here, okay? Let's just look at something here. So these dots here, when the market was trading 4,009, there was a new calculation came in off of the indicator suggesting 38, 50, 58. And if you can see, if we go forward, that calc, if there's a new low or something that violates the pattern, these calculations will stop calculating. I have been using these since 1991. And this is, so when you see this type of pattern, that I could show you guys a bunch of cool stuff with the pattern finder so you can see the visibility on this thing. But we just printed all the way down to 39 handle here. So that's an interesting print. So we're just not, we're not getting any kind of big rally that's setting up here. This is a 1 minute. Yeah, check it out. So this is what I'm talking about. When we made this new low here, this upward projection I was talking about stopped calculating. That's because the pattern was violated. So the rules that are in here tell you if certain things happen, stop calculating. Right now, we've got downside calcs coming in here at 37, 24, 16 again on the downside. And we're seeing the algo starting to suggest we're going to turn a little south there.
Order filled.
So, yeah, so what we're seeing here is it selling off really, really quickly. And it looks like all of a sudden, we just got new calcs that came in on the 1 minute update for 40, 20, 08, back to 4,000 even. So no big short covering rally is being projected now. the algos are all turned back into trend mode down on a very short term on the 1 minute. So what we're looking at here, if we go back to the 5 minute, you can see this thing is also starting to roll. It looks like there's a shot here. If we probably hold into this market grid, the 10 period moving average right now, 36.95, we're trading 32, so we're below it. The algo is suggesting that we're going to see the 10 roll back down. So the whole concept at the moment anyway for a major short covering rally looks like it's dissipating. Doesn't mean it can't happen, but that little rally to what was that high? We actually printed 71 there. That was pretty amazing. So now what we're seeing is everything's starting to roll back in. We're coming in the final half hour. So we can go through. Yeah, so right now we've got the 5 minute up here. You can see it's breaking down, and we're all the way down to 29. So the fun of the potential big rally, it looks like it's dissipating. Although the algos are suggesting we can stabilize, but it doesn't look like there's anything big coming. And a chart we haven't looked at for a while. This is interesting. Look at the 1 minute. We traded inside bar all the way up. Let's see where we are. Yeah, it's going to take a while, several hours, probably until tomorrow's opening before we're going to see this stabilization. You can see what it took from yesterday morning. This is pre-open spike on that big bar up. It took us about 8-10 hours to stabilize, get the volatility stabilized, indicators trying to do something, look like we're going to get a rally. And of course, we got this news and the hawkish Fed. Here we are at 19. So there's still a fair amount of selling going on. And look, check it out. This is the 5 minute is now giving us downward projections, 39.77, 39.41, 39.19 off of this pattern. And the only thing I can say is we're really not getting confirmation from the algos. So typically what will happen is over the next couple minutes, we'll start to see some stability, and we still have a positive PPM on the 10. We could trade back to the magical 35 number, but look at this. Here we are, 14. They're printing them down pretty hard. All right, so let's take advantage, and I'll hang around for. Yeah, you're probably right. He finally probably just stopped talking. Let's just take a look here at. Let's go to daily 10. PPM1 is now a negative 0.16. This is a daily, so that's not a good sign. PPM2 is still positive, but the 10 and 21 average 4,006, right where we traded down to, really. That was also S2 on the day as well. If I bring this up, you'll see S2 4,005.79. So there's a little cluster of numbers there. This is not necessarily a pretty chart. When you get a spike, and this is what I was trying to talk about before we got into today's session, is a lot of times if you get into a spike like what we had yesterday, you're going to see Bear with me 1 second. There we go. I couldn't get to the monitor screen here. What you see a lot of times when you get those big spikes, that ends up to be a significant number, as I talked about earlier, and that's a key pivot number on the upside. And we see the algos on the daily suggest that we are likely to have a potential turnaround, and we should hold this 10 and 21 period moving averages. It's now 0750 based on last trade. We traded back to 24 on the futures. 4,000 even is the 21. That's going to be where we need to hold there. If we don't hold, then there's potential for downside down to the 40 period moving average, which right now is 39.19. I'll cover all this stuff in tonight's YouTube video. Yeah, I'm just I love the toolbox comments. I'm just reading some of your comments here real quick. I don't know. I see somebody talking about why is the grid different. I will tell you why, actually. My trade station is different than TradingView. And I have detected, we have clients all over the planet, okay? And I believe that TradingView has multiple servers that they're running. And I don't think I've checked value, especially intraday, with people on the other side of the planet, from South America to Dubai to Europe. And I can tell you that there are differences. It's a TradingView issue. I don't know where you're located, or whoever answered that question. Are you here in the U.S. or where are you? I would ask that. I'm not sure. Listen, it's a retail product. It's not an institutional product, so I don't know for sure. But I can tell you some of my trade station indicators and stuff are slightly different than the TradingView. It has everything to do with the values. We got us a bot. Yeah, so it's funny, Bob, do you still have the 87 crash Porsche? No, I do not. Yeah, Stuart, you can join anytime. We're going to make sure you, anybody that joins now, because there's only one more day this year, you'll get access for the trading room when I get back in January. So you'll get a full month, no matter what. So, no, I do not have my Porsche. I think I sold it in 92, 93. I had a way cooler car than that. I sold it too about 5-6 years ago. I think with, I just say a comment, how much money do you need to trade with a strategy? I think because of the micros and stuff, you don't, I think if you're going to day trade, the answer to that is the platform and what they require for you to be a day trader. That's your real requirement here. Let me go back to this 5-minute chart we've got up here. Yeah, look, we're stabilizing right here a little bit. It looks like the 5-minute, is this 5? Yeah, 5-minute wants to turn back in just a little bit. So probably back to 35, right? We're not going to print down. these downward projections. And the fact that when you see these projections, what you want to do is you want to basically use the PPMs to determine what the probabilities are of reaching these things, or if they're valid. Because sometimes the pattern gets picked up, it calculates the Fibonacci, and it goes from there. And Fred, you're right. If you do CFDs, if you have access to them, like an IG account or something like that, I suspect you're talking about. Somebody like spread better types. The spreads are killer though. Yeah, so a couple questions. People are asking, what do I think of the Fed meeting? And so I'm going to risk not looking younger here. I'll come back on. We can still keep an eye on the markets here. But yeah, I think what I'll do here, folks, what do we got here? We got about 20 minutes, so we'll let the markets do whatever they're doing. I think they're going to stabilize. Got a little bit of experience of walking through a trade and being able to do that. And I think what I would like to do with the rest of the time we have together is probably, Fred, I could just real quick on Fred's comments, I could talk to you a lot about those spreads. And it's interesting because those spreads are driven by an algo, so on order flow. So the folks that are doing those CFDs are actually, it's like going to a gambling house and they're changing all of the commissions that they're charging you to make sure that you lose and they win. So there's a little bit of a problem there, I think. Yeah, are we going to have a Christmas rally? I think we still have a possibility, but I mentioned in the YouTube videos that everything that I'm looking at right now looks like the last couple of weeks are going to be potentially down. And hopefully when I get to my destination, that my internet installation and other things I have going will work out. So I don't know that I'm going to do any live or anything like that, but I will also, I'll do my best to communicate if there's any moves. I'm going to be off and on grid, literally, most of the time I'm gone. Yeah, just... Yeah, so I think the capital issue in trading is really up to what your firm is doing. And Fred's talking about these CFDs. You can actually get quite a bit of leverage with them as well, but the spreads will absolutely eat you alive. I did notice on the Fed meeting, folks, just to talk about that, just a little bit. And if you notice, we didn't talk about the 10-year. We're back to 350 again on there. You can see the big drop over here on the right-hand corner, lower corner. That's the 5-minute 10-year. But I think on the whole Fed meeting, they wanted to have that hawkish tone. And mainly because of what I said, they've got to keep that up. I didn't watch all the questions, but I want you to point out something, that in his comments, I didn't hear him mention the runoff at all. Am I wrong? You guys correct me if I'm wrong. Maybe in his Q&A, if any of you watched the Q&A, did he ever mention the QT side of things? Because I don't think he did. He's certainly not in his main comment. He didn't talk about reducing the balance sheet. He didn't talk about any of that stuff. And I think it's kind of off the table, and they're talking about rates. But meanwhile, if they're not doing a full runoff, the best I can tell they're doing between 50 and 60, not 90. And if they're not doing a full runoff, then they're still being somewhat accommodative. We're trading back at 22 here. I don't know if you folks can see these quotes in the middle of the screen, but we're trading at 22, and we're just kind of waffling around here. The 10-year right now is 350. The 30 is 354. The other day we had an inversion on the 1030 where it was actually negative. The 30 was below the 10. Haven't seen that one for a while. But the Dower, let's bring up the Dower. This is a 5-minute Dower chart, so you can see what's going on there, down 0.5%. And if we could do some analysis. So I think what I'd like to do, yeah, thanks, Tavern Tech. Yeah, that's awesome. Yeah, so I told you folks on YouTube last night. I set it up today, so we need to pay attention when the QT and the QT, they had to question them. There was nothing in the statement, and I don't think they want to talk about that. So yeah, just as we wind down here, we're back to 28. Like I said, we'll probably end up at 35, between 35 and 40 on the close. That's 40, 35 handle is probably where this thing wants to hang around there. It looks like that's kind of the sweet spot on the day. That keeps us above the 1021 average. And we'll see how it all sets up as we get into the next several days. But yeah, I'm just reading the comments here. Yeah, see, it's a very vague. We're going to continue to reduce the balance sheet, but they don't want to focus on that. And I think what they're doing is they're using the runoff in the balance sheet to balance out things that are going on from, no pun intended, to change the trajectory of the rates, what they're doing, so they can change. That's why it's being really fluffy, because they're not following through with exactly what they said they're going to do. Because if they did, we would see a much different scenario. And they focused a lot of the selling in the 2s and the 5s for the most part, and the 10s and the 30s. There's a fair amount of securities. If they get into the longer end, then they'll flatten out the curve a little more. What we've been seeing is the big inversions, and I've talked to you folks about this, and is that the 1030s and the 530s are the trades, the spreads that I watch. I don't look at 210s. That's not really that important to me. But the 530s, if you were hanging around a bank and looking at their investment portfolios and the securities they're holding, the 2s would mean nothing to you. They're more slanted towards 5. And I've said this before, if a bank's super bullish on the bond market, there's what they focus on is the duration of their overall portfolio. So if they're super bullish, they're like maybe 7 years, 7.5 would be a super bullish bank. You have to understand, banks don't like to take risk. They like to take fees. So I know. Yeah, you should give me a like before you leave. I appreciate it. We got 510 folks watching, so there should be it. There was, I think, 650, 700 at one stage. Yeah, so let's talk a little bit as we're winding down here, folks. We're trading 32. like I said, we're going to move back to 35 handle. Let's talk a little bit about the looking forward in the markets. And I show you the database every night. Our intermediate database is roughly 49% bullish, and it doesn't roll over a lot. Once it gets traction, it takes weeks and months to really change that number. And in general sense, we should see equity markets improve. And like I said, I have a really difficult time based on the database, especially if we move that meter from 49% over the next 6-8 weeks up to a 60 handle, like 62, 64 plus percent. It's going to be very difficult to have, that'll represent about 10 or 12,000 symbols that are in trend mode that the market's going to roll over. I do think we've seen the low of this pattern, and all we're seeing right now in these markets is just noise and consolidation. I go about this on a regular YouTube channel. Is really what we're looking at here is the end of a year and an end of a bad year, right? So we have, we've got markets down 20 plus in the NASDAQ, a lot of these symbols. Matter of fact, we'll take a look at Tesla. It seems to be pretty much looked at. We're still down 271, 156. So I'll go back to that. But really what we're looking at year end here, it's just a lot of rebalancing of portfolios, decisions, positioning for next year. A lot of that kind of talk. I went through a little bit of a scenario. Sometimes my worlds get commingled, and I'm not sure where I said things, whether I said them in the live room or if it was on YouTube. It all blends together for me at some point. But, what we're really looking at is just all of this rebalancing, people making decisions. I talked about, I've been in research rooms. I know what it looks like when year end and everybody's trying to put their narratives out there, and they're trying to come up. Sometimes some of these rooms are run by consensus. Some of them are run by dictators. Somebody has, I was at Merrill Lynch when Bob Farrell was there, and he was a dictator. And that's okay. He ran the department. He gets to decide what goes on. I mean, I was restricted from even covering the S&P. And when I came to Merrill, that was my main markets that I covered. So, like I said, he was a dictator, and he got to do that. It was his job, his department. So I think all I'm saying here is that you get to when you're looking at these rooms, all we're seeing is everybody trying to decide where the bets are. And one of my big themes that I'm working on in the background is onshoring a real thing. Here we are, 38.50. So 38.40, we're coming right into that. What do we got here? 9 minutes to go. Yeah, that's where they're going to want this thing. So anyway, so all you're seeing in the world is really a decision process. There's going to be we're going to get 2 and 3 days of directional movements, and in the end, we're in this monster sideways pattern. And I've been talking about this chop, and the chop is really 3750 to 4100. And we just printed the higher end the other day. And I see Mark's talking about muni bonds price too rich at current levels. That's possible. I think the bond market has been so depressed with the rally in yields and the sell-off in bonds was pretty brutal on our way up when the 10-year was printing up in the mid-4s. That was a pretty brutal sell-off. So I think, like all these markets, there's some stabilization that has to go on there. Yeah, I'm just reading some comments here. Yeah, Keith, I will make a comment on the on crude, and I think one of the things about crude, and I've talked about that, probably that print down. I covered this on YouTube. Is I think we're probably seeing the lows on crude. We're going to see a bit of a rally, but I think we're locked into a 70 to 84 handle for at the moment. But we'll say with the scenario that is out there with the Saudis and China and Russia and all those guys, you would yeah, how's the best way to put it? Yeah, that's kind of scary. There's a lot of talk, the BRICS maybe coming up with their own currency, the Western world trying to block out Russia. You can see how the world's lined up. I mean, you've got India, Russia, the Saudis, the Middle East, really, with Russia. They're not going to break away. And we just saw a big alliance. I mean, Biden goes to Saudi and gets a fist bump. These guys are like hugging it out with Xi Jinping. I'm joking, but it was like a love fest in comparison. So, man, there's so much. I think that I think there's a lot of conversations that we're going to have in 2023 about gold, about the BRICS, about a lot of things that are happening some in the background, but some in the foreground, but nobody's paying attention, right? So that is probably that's it. Yeah, and Craig, you're right. That's one of the conversations. Not only has China bought a lot, Russia's got a lot, and there's a whole bunch of wannabe BRICS that are going to have to, if they were to do a currency, I would just put this out there for you folks to think about, is if they were to do a new currency and they backed it by gold, there would have to be a lot of physical gold bought. You can't do it with digital gold. So you got to have the real stuff. You get people like South America or something. I'm sorry, South Africa. In South Africa, they've got all the gold. They have all the gold. So it's easy for them to do stuff. But there's players that want to potentially be in that consortium. I think between the U.S. and different regulatory agencies in the U.S., they're really starting to isolate. We're starting to get isolated in the world, and especially with the Russia situation. Yeah, and I'm sure you're right about the Grand Canyon, for sure. I'm just reading a lot of comments coming in here. Yeah, and that's the question. What happens when half of the world stops using the dollar? And that's the risk. And and I think what you're seeing, maybe folks don't realize it, when you see Xi Jinping go to Saudi, that they're putting an alliance together. I mean, China needs the U.S. and needs the world markets for their stuff, but there's an interesting scenario that's building in the background for sure. And by the way, I don't think the U.S. has upped 1 ounce of holding in gold for sure for the last several years, but maybe going back for a decade, they probably haven't got 1 more ounce in storage than they did before. Yeah, so so it's kind of interesting here, folks. We're coming into the end here. Let's watch the last couple of minutes. Let's go to another page. Let's watch this last couple minutes together here. And I'll come back and we'll do a couple stocks here. This is the 5 minute. 5 minute, interesting enough, got some new upward objectives on that run. We got 86, 41.14, 41.32, and algos have turned back sort of kind of bullish. Not super bullish, but let's go to the 1 to watch the end of the session here. Yeah, so the 1 is suggesting where we at here. Next couple of minutes looks like a potential downside here. There's new objective just came in down here, 4,003, 87, 78. I don't think those are very realistic. You'll get these on these little short-term charts. The pattern's there, but I don't think the movement's there. So we're at 33. I said we'd probably end up at 35. That's probably exactly what's going to happen here on the cash, on the close of the cash. Yeah, so Pamela, just answer your question here. Yeah, the upside this is one of the things that you never know. Just talking to the WaveTech database here, we're printing, what are we printing? 4033. What happens is, you know, the potential holding period, you know what the relative number of stocks that are likely to appreciate. Probably 60+% of the signals that have come out of the system will end up being profitable. But what you're likely to see is some movement to the upside. We don't know what the magnitude of the rally will be, and that's what I depend on the all the technicals and some of those targets to be. So a little bit of selling. Here's 29. That was the close, folks. That was it. So let me just get back over to this page here. Yeah, so we finished 29.30, right in that range. So no disaster, no big sell-off, no big rally. Pretty neutral, I would call it. Let's go over to, I believe this is the daily. Yeah, so the daily is right above the moving averages. The algos are suggesting that tomorrow has potential to turn back up. We still have live Fibonacci targets for 41.47, 41.87, which would suggest that we're going to print back up to that high that we printed yesterday on that spike. So that is definitely something there from that standpoint. So if you want, we can go through, I can bring up Tesla. Let's talk a little Tesla. That seems to be the stock of the day, the stock. And then we'll call it quits here. And this will start with daily. And I mentioned this, I think I covered it at the end of one of the live streams at night, but it does look like in the next couple of days, we should start to see a little bit of a stabilization, maybe a rally back into the moving averages. Right now, there's a Fibonacci target downside 151, and we printed 155 today. There was 3 Fibonacci, 164, 151, 142. So it looks like maybe even today, or we could print down to 151 on a daily, and that could be a problem. I think, you know, I won't go into a big EV thing. I do think the basic premise of the EVs is somewhat of a joke. As I mentioned briefly the other night when I covered it, is I live in the area where a lot of folks like to fix up old cars, like somebody, you know, the 50s and 60 cars, the muscle cars, right? You're not going to see any old Teslas on the road, I don't think. Maybe there'll be something there, but I think a lot of these cars will just be ground up and spit up and recycled. And the problem's going to be is about there's going to be a cycle. If they get a lot of traction on the cars, they're going to have to ultimately have a way to replace the batteries. The batteries are good, so I understand 6-8 years they just start dying. The charge, the range, everything's going to go down. And I don't think most of the cars, I know there's a couple cars out there that are designed to be where you can put new batteries in. I don't think Teslas are. But anyway, but I think what's happening with Tesla, this is we'll put I'll put on I guess a tin helmet for a minute, is that maybe there's a bunch of folks out there would like to absolutely punish Mr. Musk on about anything because of him, Twitter and the stuff that he's releasing. And I know there's a big podcast, I'm not sure when it's happening, or big spaces going on today that is really going out after COVID and a bunch of stuff here. And I don't know much about it, but I've been on a couple spaces where Musk has been on, and the politicians and a lot of folks have got to be going crazy on that. So maybe there's some people trying to push his stock down. Yeah, and I agree with Floyd's Garage. Yeah, so let's do NEO because NEO's related. Let me click on a weekly chart here on Tesla, and this is the one that's really I've been talking about. The algos are suggesting that the 10-period moving average is going to start to flatten out, but it's still going down. It's at 195, 194.52. It's going down right now about 6 per day. So very quickly, all of a sudden, we're going to be down into the 180 handle. I'd watch the action over the next several days to see if we can stabilize, if we can start to penetrate through the weekly 10-period moving average. That would be at least a sign of stability. It looks like the 10 is on a direct path to cross through the 200, and this is weekly. So this orange line through here is a 200-week average, and it looked like we were going to hold. We got a little bounce. I remember a couple of weeks I talked about that. We should get a bounce, and we did get a bounce back to around 200. I thought we'd bounce toward that 10-period moving average. We did, but now this angle of attack here, this is a big, big downtrend, and I don't see any way out of that. So let's go ahead and put NEO up, and I know we can. To me, and I talked a little bit, I'm going to condense this chart a little bit. This looks like every meme stock that there was in 2020 to 21, and all of these stocks that are coming back into the base where they started from. And I think that's what's happening here with NEO. I don't have enough data to calculate the algos. I have to change some settings. I won't do that now. But we do have some upward objectives, and we're trading above the 10. Right now we're at 12.10, 11.44 is the 10, but the 10's still down. So it's going to take, this is weekly, it's going to take a couple of weeks. If you can hold in these levels, then you get a shot at maybe some of these Fibonacci numbers, maybe heading back to the 200-week moving average there. That would get us back to around, that's 22. That's a pretty big run for this stock, but there's going to be a lot of resistance between, we'll just say between about 15 and 17. So this stock, the best you could hope for this stock is that it consolidates, seems to be in a better position than Tesla. But if you look at this symbol, Tesla would be more of, let me just draw in a number so we don't, so you know exactly what I'm talking about. But Tesla would be on a relative basis like here. So NEO has maybe completed the downtrend, and maybe it's going to, set up some kind of pattern like I just drew in. Maybe that's what what we'll see from that standpoint. But I'm just trying to move this thing out of the way here. 1 second. Okay, so yeah, so that's really what we're looking at here on NEO. So yeah, I'm just looking at some comments. Get ready to let's go back over to here. Okay, let's do this, folks, and we're going to sign out. So I'll come back here and just thank everybody for coming. We've lost a couple hundred people as we're winding down, but that's okay. Yeah. Yeah, that's fine. Yeah. I'm just looking at Tavern. I have an off-grid home as well. So yeah, so yeah, my favorite is the guy that had a gas generator on the back to charge his Tesla. That was the best one, best meme I've seen. But anyway, listen, I think electric will be a supplement. You know, you guys look at me, I'm an old dude. I'm not necessarily old school. I've been on top of the technology for a long time, and I think there's some merit. It's just not going to replace fossil fuels, I don't think, ever. You still got to produce the energy some way. And maybe some of this new technology that's being run around, and we've got, you know, fusion. One of my old clients used to work at Livermore Labs, and it's if you know anything about Livermore, he was telling me that they tried to back in the 80s, there was some report that somebody had figured out how to get fusion at room temperature, and that would be a game changer if you could. And the reality is you can't. And yeah, I'm just looking at some comments here, but the reality is that you can't. So we need some kind of very, very good energy. I tell everybody, if you want to own a Tesla, you want to live in Arizona, it's a great place to be because you're as green as you're going to be. We have nuclear plant and we have hydro. What's left of it anyway. Lake Mead's getting pretty low, to say the least. Yeah, and I agree. I almost said that earlier, Dave. You're talking about Tesla has to come up with something to move the stock up. Yeah, it's gotten to be a very boring stock, right? And I think that's the case. I mean, there was a time when numbers and sales and all that stuff would work, but we're not seeing that type of move anymore. And yeah, we could have a whole conversation here, folks. I love the interaction here. Is Tavern Tech's talking about they have these mini nuclear reactors. The new nuclear reactors they most likely will never melt down. There's no Chernobyl about to happen. The problem is the folks that are behind ESG and all that stuff are very anti nuclear is the only way to put it. And there's I think they'll end up losing, but I think that's the case. Yeah, it's funny. I'm just looking at some. Yeah, we have the oldest nuclear plants. That's because no one, I mean, look at what happened in Germany. Look at France. I mean, they were pretty much had everything together, and just all this. This ideology, and people say they want electric, but where are you getting the electric from? Solar panels and wind is not going to do it. Amazing world. There is no way to program the models in. The only way to get those triggers are to get wave tech. And we've got, 16,000 symbols in there roughly. Yeah, I mean, this whole conversation would be fun. Maybe what we should do, folks. I haven't done any spaces for a while. It's a bad time. If everything works really good, we're going to put Elon Musk to test. I have Starlink being installed where I'm going, and once I've got that up and running, if I can run spaces or something, so maybe while I'm off, we'll do a couple of Twitter spaces. So follow me on Twitter. It's Portfolio Expert. And I think I should, if not today, tomorrow, I should show up here as having my blue check mark. They haven't given it to me yet, but it's coming, I hope. We'll see. Yeah, I mean, you have no electric bills, it's just your $40,000 solar system, right? That's the funny part. So, depending on the size, yeah. So, yeah, there's the downside. You're paying, you just paid it once. So, yeah, I've actually set up Starlink. I just took it from the location it was at, and I shipped it to where I'm going. So we'll see how that transition happens. I've checked the coverage and everything. It's like the best thing ever. I've set up HughesNet myself. I've set up, I was actually on top of a building in Walnut Creek, California, putting in a satellite for our quotes that we got in our office. Myself and one of the guys that work with me, we were up there putting, so I've zeroed in all those, and they're a pain in the butt to get zeroed in and get really good signals. Starlink, you just set it, put it on a spot, no blockage, it does its own. It's probably the easiest thing I've ever seen to set up. So I'm actually very familiar with it. I've actually used it, and it's as good as a home cable. It's pretty amazing. A couple little glitches, once in a while you lose signal, but pretty amazing. And so, yeah, SP, that's cool. Exactly. I mean, I think that's one of the applications I think is good. I watched. I'm kind of trying to get stuck out of this loop here, folks. But there's a guy named Mario Nufa does pretty good spaces, and he had Musk on there the other day. It was an absolute Tony Stark moment. You guys know that Tony Stark's character was modeled after Elon, right? So Elon is talking on Twitter, which he owns, to a bunch of people on a Twitter Spaces while he was flying on his private jet using Starlink. It was the coolest moment if you think about it. And he probably already has a Neuralink implant, so he could think faster. Yeah, and that's Bo. That's what I was talking about with the, with the solar. It's gotten a little better. There's been quite a few improvements, and I think actually I was pretty much against Tesla batteries in the beginning. I found a battery that was saltwater based, but I think that the power walls are probably the best way to go. Yeah, and I agree. Like I said, man, I'd love to talk to you folks. I wish you were actually talking to me. So maybe what we do is we come up with a Twitter space, and we get there, and you can raise your hand and we can talk. Because I've only done probably 4 or 5 of them, and probably my most fun one was while I was choking down a bottle of wine. that was fun. But yeah, I'd love love hearing from all you folks. I wish it's kind of hard when you sit in a room by yourself like I am right now and talk to yourself for 2.5 hours. So anyway, appreciate everyone coming today. I really do. We had, looks like a really good show up. That was awesome. Yeah, so Eric, let's talk about that. Final talk. We've got 345 people still hanging out. Let's I I've been kicking around doing a couple things. I know I'm planning a trip to the UK and when is that? I think it's at the end of beginning of March. I'm trying to put something together, and I want to do something there. I actually have an event that I'm going there for, and then what I've been kicking around is possibly doing something here, even in Arizona. Would probably be Scottsdale based because that's where all the infrastructure for rooms are, and or possibly San Antonio, Texas. And so, maybe make some comments. You can send emails to me, info@Kindle Report. You can do that as well. Yeah, I'm going to, as soon as I figure out the UK situation, I will be doing that. I'm trying to work out an event with UCL in London, which is a University of London, and I think that will hopefully something like that will come together, and it's promising. But even if that doesn't happen, I want to do something there. I've got quite a few people between around the UK, including Germany and Switzerland, some folks that I would like to have. And I think, so that's the other thing, Tavern Tech, I'm thinking is Scottsdale. And this is what the plan will be, actually. The plan would be this, okay? I want to put together, this is what I'm thinking about. So give me some feedback here while we're just hanging out, is that do an event here in Scottsdale or in wherever, somewhere here in the US. And the only thing that I would have to do if we have to get a room, then try to keep the cost down to a minimum, just enough that I think it's going to take to cover the room. And if we can put something like that together, I'm not looking to make a profit on this. It's just trying to facilitate all of us being able to get together. So I get it, Craig. May be cold in UK this winter. That's okay. I grew up in Chicago, so you can't get that cold. But anyway, so what I'm thinking is put an event together. I've said this in the live room. I don't care if it's 50 or 200 or 500 or 1,000 people. We just we'll try to do enough ahead of time where we can put a really, really nice event together. I'll try to gather some of my old friends and people that I think it would be cool to do and be educational, on everything, maybe do live trading there, all that. We'll figure it out. I'm actually trying to put this together. The London situation would be much more technical in formation, depending on what we end up doing. Talk about cold. I see somebody commenting in Burlington, Chicago. Yeah, so I have a daughter who lives there. And I grew up in Chicago. There you go, Flagstaff. Yeah, I don't know how many people can they handle there. Tavern Tech, I used to live in Incline Village, so I know that well too. And I know Michigan because that's I grew up in Indiana, right outside of Chicago, on Lake Michigan, literally. On my town was on that. Yeah, Lake Tahoe is fantastic. Yeah, the nice thing about Scottsdale, there's a lot of venues. We used to do all of our national conferences for our institutional clients. We did them there, so they work out really good. Yeah, so yeah, I'm not from AZ, and I went to Indiana, grew up in Indiana, northern Indiana, outside of Chicago, and worked in Chicago for a while. Yeah, so I'm allergic to California. Yeah, I can understand that. I do not know of, let's see, 76. I guess I do know that Blizzard of 76. I was there then. Yes. Benton Harbor. Wow. Um, I'm just reading some comments here, folks. Bear with me. Yeah, I used to live in the Bay Area. I was on the Pacific Options Exchange trader for a while there. Worked on the Chicago CBOT. Yeah, so James Sanchez, right after the first of the year, I'm going to start some training classes, Wave Tech, Portfolio Expert. We're going to get back engaged there because I think, see, I don't have as negative a view. I think the reason why I don't have that negative of a view on 23 is because it tends to be, I tend to be a contrarian. I tend to be a contra trend trader. It's always on the other side. Yeah, I don't think the learning curve's that bad. If somebody's on here that's actually got the indicators, indicators are pretty simple, I think. Yeah, so this is funny. I see somebody, JR42. I was in a cover band in 19, let's see, actually it was probably around 76. At that time. Yeah, that's probably about right. And the name of the band was Glacier. And if you remember in 76, 78, Time Magazine was talking about the coming ice age then. And so we had this little stick that we did when we started a band that I were Glacier and we're getting prepared for the coming ice age and all that stuff. It was pretty funny. Yeah, that's cool. I'm just still reading uh-oh, Chris, we got a problem, man. I went to IU. We're not going to have fun. Joking, of course. Not Purdue, man. Ouch. Yeah, Tommy, I'm fighting anyway. I can't say anything. Yeah, I understand, Tommy, that problem completely. I was, oh man. Hey, listen, I played once on a live stream. I think I played some of the music. Yeah, so Bo, let's talk about, I guess we'll just keep going for a few minutes, folks. What time is it getting to be? Yeah, I've got a few more minutes. That's pretty funny. I'm loving this conversation. The timeline's moving pretty quick here. Yeah, so I think it was Bo. I was going to answer Bo's question. Yeah, if a person buys WaveTech, does it come loaded with what you have? Yeah, so WaveTech is 100% customizable platform, and you can build your own. It's a portfolio manager, so it does have trading signals in there, but it's really about portfolio management, especially if you have 401ks. And I'm going to do the training. By the way, this is the basic plan. When I get back, I'm putting together details. Is doing we used to do these crazy long 3-hour long training sessions. And what the plan is we're going to do 1-hour training sessions, probably not even initially do Q&A. I'm going to take those training sessions and cut them down to and edit them, and then make a master class for both WaveTech and Portfolio Expert. And the yeah, Tavern Tech, it sounds like we could have a lot of fun hanging out talking. Anyway, I have a very similar path. We'll just say that. Yeah, so exactly. And Bo, I'm talking to you here is, yeah, there's some things there. So just hang out until we get up the first of the year. You'll be able to see some of the things that I have going that I think will help you. And that's the plan. That's the person I want to help is you have your own 401k or you're trying to manage some money. Yeah, well, my band is not going to play since I don't have a band anymore, Vito. That's a great idea. I have to get my chops together. And what would be even more fun, okay, I like your idea, I like where you're going, is to get a list of everybody who would like to play in like a WaveTech band, and we make it up on the fly and just jam. How cool would that be? That would be fun. I think we would have some crazy fun doing something like that. Yeah, that's interesting. What we're looking at here, this podcast on hot and cold fusion. I know there's some breakthroughs happening. It's super exciting. Yeah, so MG, Graham, there's going to be PX. Probably the tentative thought, don't hold me to this, is Tuesday is going to be WaveTech for an hour. Friday is going to be Portfolio Expert. And there's probably, the plan is, that's good. We need a cowbell player, no problem. But yeah, Rock Tech, I like it, Bo. Anyway, yeah, do WaveTech on Tuesday. Friday would be, the PX Day, Portfolio Expert. And that would be super cool, super exciting. Like I said, I'm going back full circle here, folks. Fun hanging out and talking to everybody. It would be really cool to get together. We had so much fun back in the heyday of VPN Partners and having these annual deals. I always had a live band at one of the nights. Like I said, the only goal would be to figure out what this thing's going to cost and try to get an estimate on how many people are going to come, and try to figure out just how to pay for it. Not even in the institutional days, I didn't make any money. Maybe there'll be the goal was always break even. So we just figured out what that cost was, find the venue and all that. So that would be That would be way cool. Yeah, I'm sure you're right. There's no breakthrough in cold fusion, but the nuclear is changing pretty quickly here. I hope people will pay attention. So I'm looking at the last trade in ES, folks, just flashing back here, 38.37. Nothing's really changed there. And anyway, folks, this was fun kind of hanging out, just interacting with all of you. Yeah, so it sounds like what we need to do. So, okay, so if you folks, if you're still listening, there's 250 still listening. If you would go to kendallreport.com, and all that's there is a form to fill out, name, email address. We don't spam and do a bunch of that stuff. We do send emails out once in a while, but it's not to hound you and try to get money from you. It's really to tell you when we have significant things going on, like maybe a conference, right? So if you're interested, you can put in a comment, interested in conference. So we need to start kind of doing that because it needs to be planned several months out in the future. So that's I would say yeah. And if you get signed up for that, and then maybe we can also put a link in the description on the video. It's not there. We'll have to work on that. I'll talk to an associate when I finish this stream today. But I would just seriously, I would just kind of, I think it would be super fun. I like what Bo came up with. I like Rock Tech. I like it. But how cool would that be to get, I don't know, 15, 20 guys to bring their gear with them? That would be really, really cool. Yeah, and hey, Jim, I'm going to be calling you real soon. Okay, so probably next week when I'm on break. Talking to you, Jim, Dr. Jim. Okay. So yeah. So anyway, we're gonna do some stuff here. I'm really looking forward to 2023. So trying to put some venues together. Maybe there's a couple events that could be done and planned. So that would be fun. All right, cool. Eric, thanks. All right, awesome. Yeah, just go there and sign up. I'm serious. We're not going to hound you guys. We don't do that. I don't even know last time we sent up a group email. And if you feel harassed, you can unsubscribe and it's off the list. So it's all compliant. So it's nothing like that. Oh, well, thank you. Thank you, George. Appreciate it. And Eric, you're absolutely right. Life is about people and personalities and interacting. That is life. They tried to take that away from us. Nice try. I don't think they'll ever get close to that again. I sure hope not. But listen, it would be like super cool. I mean that. It's when I used to do these conferences in the past, I end up not even being able to eat. So I'll have to hide from you guys when feeding time. But if we get this together, Alan Watts, absolutely. I think it would be super fun. I really do. I've been wanting to do this we've been talking about it since COVID days. And I'm hoping that there's some things that we're going to do after the first of the year. It's going to provide a better service to the community and, everything. I've got a lot of plans for 23. And I told everybody here, maybe some of you are my peers. I know at least one or a couple that are on here that are, but I think it's very interesting. I was told a friend of mine this morning, to be 70 and to be able to see a future is amazing, okay? Because I could tell you, I could go to my Facebook with a bunch of people I went to high school with, and they're sucking on oxygen, they're overweight, and they don't care about life anymore. And they're just counting the days, maybe playing golf. I've never not a golfer. I hate golf. It's the biggest waste of time. That's me. Okay. I'm not going to spend my time doing that. But what I'm telling you is to stay engaged in life and keep your mind active is what it's all about. And I can tell you, I don't know if he's still around, but Dr. Jim is an amazing person. Thank you for hooking up with me. It's been a great honor. So anyway, I'm done. Thank you for hanging out. We ended up doing 3 hours anyway. I tried to shorten it a little bit today. You got a sense for trading. You got not the typical old live stream we used to do, but this was a day of volatility and craziness. And, tomorrow will be another one. Yeah. So, I'm just looking at what Gil said. Yeah. Well, we could actually put, a digital band together because there's collaboration software now that you can everybody set in their own space and jam it out. So might be able to get some head start on that. That would be pretty cool. You're welcome, Jim. You deserve it. All right, folks, we're going to call it quits. Appreciate everybody hung out. Still get a couple hundred, so appreciate it. It was fun hanging out today. I'll see you in a few hours on YouTube, and we'll see what we can figure out for this. I've really got a lot of work to do between now and tomorrow night getting you set up. I actually had notes on this thing right here, right? These are my notes. I don't think I covered any of them. So I guess I'll use those for tonight. But the plan is to try to get some pretty straightforwardness. And the best thing, I know it sounds like a pitch, but listen, to use the TradingView indicators, they're one-time fee. I'm not trying to subscribe you and continue to, that's not the point. And I think TradingView, I don't know if they still have their year-end deal, but they're giving away like an all-time, you pay once and you get it forever, whatever that means. So, yeah. So anyway, folks, have a great day. I'm signing out. We'll see you later. Hit that like button, folks. See you tonight.